Now we move on to our next speaker, and it is Dominik Schmidt-Kiefer, Divisional Board Member, Big Data and Advanced Analytics at Commerzbank. Mr. Schmidt-Kiefer joined Commerzbank in 2010 as head of counterparty and issuer risk. And after various positions in group market risk management, he was heading the division from 2018 till 2020. And in 2020, he became head of the Big Data and Advanced Analytics division at Commerzbank. And in his presentation, he's going to talk about supporting loan decisions with ML models. And we're very much looking forward to your case study. Dominik? I think we cannot hear you. At least I can't hear you.
Now it's better.
Yeah.
Classical one, yeah. Unmute yourself.
That's fine.
So thanks for the introduction. Let me go to the presentation that I would like to share today. Here we go. And please let me know if you can see something. Do you see the presentation?
Good. Thank you very much.
Good, then let's give it a start. So yes, the topic that I would like to talk today about is the how can you actually use artificial intelligence in banking, in particular here in the credit process. And as you saw or as you heard in the introduction, I grew up in the risk function, and that's why obviously it's natural that we talk about how you can actually apply it in the risk function. First of all, let me give you a little bit of a background of where I'm working, and this is Commerzbank. We are a leading bank for the German Mittelstand. We support 30% of the foreign trade of Germany, which we're very proud of. And we support also 11 million private clients. So why do I say that? Because we want to have not only a personal advisory offering, we also want to have a digital advisory or digital offering, a comprehensive digital experience for our customers. And that's why it is important that we also invest in AI technology. And I now give you a little bit of a background why this is the case. Now, if you go to the second page, and this is now the area that I'm working in, it's called Big Data and Advanced Analytics. We create value from data. Now, how do we do that? First of all, the bank created the area in order to get a center of competence if we deal with, let's say, big data, i.e. we collect all the data that the bank has, all the transactions, and we also get data from the outside that is publicly available, added to this big pot of data, and then we apply all sorts of analytics, also advanced analytics or artificial intelligence, and that is the second column here, where we then provide insights to, let's say, our sales force, so they can actually, that they better understand when to pick up the phone and call the client or customer to offer a certain product that is then needed at the customer. But we also use the technology, artificial intelligence and the big data in order to improve our own processes. How can we make our own processes that are quite cumbersome, heavily regulated? Where can we use the analytics or the AI in order to get more efficient and cheaper? And third, and last but not least, we also want to use the insights that we gain into this big data in our credit processes, because the better the credit decision is, the less we have in losses on the one hand, and also the customer experience gets better if you don't have to wait 2 weeks for a credit decision, but rather get it online within milliseconds. And the area does not only provide the data and clever insights, we also then provide the tools throughout the bank so that you actually can use or access the data and can make use of the AI. So that's the third column that you see on this page here. And last but not least, we operate in a heavily regulated environment. We also have rating tools in our area in order to run them as you have them today, but also then bring them to the next level or next generation when you then start applying artificial intelligence into rating models. Obviously, this is something that we also have to discuss with our supervisors and regulators, and this is going to be a longer process. Nevertheless, we want to kick off this process right now. On the bottom of the page, you can see examples of where we're actually having use cases up and running already, and just taking two of them, which is the press for today, where we screen through the entire press coverage that we can get hold of. And then we provide the credit analyst the information on the particular corporate client that they have to overlook, so that they get some, red flags in case something goes wrong, or even also good news, also an option for a credit officer to take in. On the other side, you look, for instance, at Matchpoint, and Matchpoint is where we provide a search engine in the bank that helps us to find the legal or natural person. Now, it may sound trivial. Why is that something that is so difficult? But for those of you who grew up in Germany or familiar with the German language, you would be surprised how many expressions you can have of the surname Meyer. And actually, that's why we, at this point in time, apply a fuzzy logic to help whoever is looking for a person to find the right person if there is something to be done. What we want to discuss today is obviously the digital account check, the yellow marked one, and then I would like to deep dive into this one. So the question is, how can we support our loan decisions with AI? First of all, what is the situation prior to our use case? If you want to apply for a loan, you walk into a branch, and the employee of the bank asks you for a ton of paper. Yeah, you have to provide what your regular income is, documentation around that. You have to provide what are the regular expenses that you have, also paper-based, so that the bank gets an idea of what your financial situation is and whether or not you're actually creditworthy in order to get the credit. So in the past, as I said, you walk into a bank, you bring a lot of paper, and then the member of the branch has to key it into a system, does that manually. So this is obviously, as you can imagine, an error-prone process. It's a very expensive process because you have to set aside a member of the bank to actually doing that. And in particular for our customer, it's a very cumbersome process because you have to provide all this data and you have to collect it at home. You have to bring it to the bank, and then you stand next to the branch employee in order to get the stuff done. Not very good. And also, if you go to the, there are some external providers that give you some support here, but all of that is then difficult to validate. It doesn't really scale to other products and other use cases. So in a nutshell, we decided we have to do something on our own. And that started end of 2018, or let's say mid of 2018. We had one employee who said, okay, well, I program something, I do a proof of concept here. And that was then decided at the end of 2018, yes, this is something that sounds promising, let's get it industrialized. We started the process together with Google here, because we wanted to use Google Cloud for this particular topic. And together with the Google engagement team, we brought up, or we designed the architecture, how it's supposed to look like, and started the implementation pretty much at the end of March 2019. And then, as you can imagine, you have to tick off a lot of boxes around documentation, governance around it. Regulatory topics have to be adhered to, in particular because we were a front runner in the bank using cloud technology. Nevertheless, in October 2019, we managed to have the go live of our minimum viable product, which was in the branch channel, i.e. we were supporting our own employees in that process. Yeah, so they could actually go into the transactions that we have in your account, pretty much the account statement that you get on a monthly basis. And we were analyzing through that, what is your financial situation? Yeah, so we supported our branch network with the product October 2019. It was very well received because obviously now they didn't have to key it in manually. It was done based on the information that we have in your account, the account of the customer. Since October 2019, we then did improve the model in 3 dimensions. We actually switched the model. We went from a neural network to a, let's say, it's called, the official word is, I have to read that, bidirectional encoder representation from transformers, because that produced the better results. But we also improved the processes, i.e. we brought in more data that we could analyze. Not only the data that is in your account, also your credit card transactions could be analyzed. And then now in this PSD2, we offered also now that you can bring in account information from other banks when you want to apply for a loan at Commerzbank. obviously you have to give us the consent for that, otherwise we are not able to actually read your data. So methodology was improved, process got improved, and also we offered it now to more channels. Yeah, as I said, the beginning was only the branch network because we still wanted to have one of our employees looking on that stuff. The second topic was we wanted to bring it online, and we did that at the beginning of the year. You now can, in the online channel, also start applying for a loan. You give us the access to your account that we can read the information in there. You can bring in information from other banks, and an automatic process defines then what is the credit worthiness, what is your financial situation based on the information in your account. The next channel is going to be the mobile one, not yet live, but we're working on it. So this is also a dimension of improvement that we applied to the model in between. So now, what does actually the model do? And that brings me to the next page. So the question is, if a customer walks into one of our branches and asks for a loan, so the key question obviously is what is on the income side and what is on the regular expense side. So the question is, if you now want to do that on an automated basis and we go through your transactions, you don't have to hand in your payslip or your documentation for what is your salary that you get. We look into your account. And then we see, okay, we have an amount of 2,500 euros. It's called Commerzbank AG Zentrale Frankfurt Lohngehalt. Pretty much we think the machine has now to understand that this statement is your income. On the other side, it has to understand that the $29.99 that you paid for a jeans is something that falls in the category shopping. And then you have more information around saving or mortgage. Now, the tricky thing is, it's not always called Lohngehalt, or let's say salary. Yeah, you get all sorts of information in the booking text, and you can have all sorts of amounts next to that. Taking the example on the very bottom, it pretty much looks the same. But we have to distinguish between saving and mortgage. So we have to take into account the amount here. If it's an even amount like the 100 euro, it's most likely a saving. If it's a 142.42, it's probably a mortgage because no one would have a saving amount of 142.42. So this is why the model has to learn to distinguish what's going on here. Why is that important? A mortgage is something where you actually have an obligation that you cannot easily skip. A saving is something that you actually can reduce in case you get into financial troubles. So that is why we have to categorize whatever happens on your account. And the model does exactly that. It helps us to come up with categories so that the bank gets a better understanding of what is happening in your what is your financial activity, and are you in a position with what we see there to carry an additional loan that you now apply for. So that's how we distinguish it in 46 categories. And as of today, we achieve an accuracy of 92%. And that is way above the manual one. So we always do comparisons or back testing against the manual process. And as you can see here, we're above the manual process. They have higher error rates. And not only that, because we're now using a technology here, it's way faster, right? You don't have to walk into a branch, hand in paper, it has to be typed in. You basically log online, you go online, you log into your account, you click the box, I would like to do that, to run that check. If you want to, you can add information per click from other bank accounts that you may have. And then this is happening instantaneously. So this is also a lot more convenient for our clients. That's why we were actually driving it forward. So it helps in many dimensions. Now, before I spend too much time on the model, I would also like to spend maybe a minute on the technology background here. As you can see, I mean, given that this is a process that we want to offer our customers online, and even in the branch, you want to avoid that you have latency, right? I mean, if you stand next to the customer and getting nervous because the system just doesn't respond, or if you are logged online as customer and the system just doesn't respond, you just skip the process, right? You walk away. And that's why we need low latency, high performing, scalability. Yeah, we need operational stability and all of that at low costs. And last but not least, we also wanted to drive the innovation and technology in Commerzbank because you cannot separate banking from modern technology anymore. And this is a front runner in using these modern technologies. and applying then a fancy state-of-the-art methodology on top of that. So in a nutshell, the teams that were developing all of that and currently still bring further enhancing it, they were quite, I mean, if you talk to them, they're hell proud, and they actually keep on running to develop that further. Now, as we operate here in Europe, we also have a high standards on data protection. And me as a customer, I like these high standards, but also as a bank, we have to make sure that not only your savings are safe in a bank, but also your private data. And this is why we apply a lot of, we've spent a lot of efforts to make that data as safe as possible in these days. So we apply two-factor authentication. We use the MTLS protocol in transit. We run it into a virtual network in the Google Cloud, i.e. there is no access from the outside. And if we have the data in rest, we also encrypt it even further with a key that is only available to us and no one else, in particular not Google. And as a matter of fact, all of that is then stored in the EU. So that is basically what we do. And that brings me then to the last page that I would like to show you here, which is what's next. Easy said, scale, scale, scale in many dimensions. First, I would like to see more loan products. Currently, it's only applied to consumer loans, but you can also have it to credit card applications, to mortgage loans, whatever you can come up with. Whenever you need a credit decision, this is where you can use it. And given the nature how we designed it and how it's actually implemented, it is scalable. We also, as I said, want to use it in different channels, i.e. the mobile one is the next one. So you can actually apply for a loan on your mobile phone. And then we also think about making it available for other use cases. I mean, digital assistant. So if you want to run your own, let's say, how you would classify your own stuff, this is something where we could use, that is what we could use this one for. In order to get there, improve, improve, improve. So the model is regularly improved in the dimension of we want to improve the quality of our tagging, but we also want to improve the granularity of our tagging so that we get a better understanding of what happens on your account as a customer, so that you can offer better services and we can give you a good and profound answer if you apply for a loan in one of our branches. And that concludes my presentation. So if there are any questions, I'm happy to take them now.
Thank you very much, Dominik. That was really a fascinating use case into the application of not only AI, but generally, digitizing the banking sector. And I know it's not the easiest sector to digitize due to heavy regulations. So maybe you have time for one question. You talked about what you did. Actually, okay, I'm going to ask not my question, but the question that have been asked here. How does your in-house solution compare to commercial solutions? For example, FinAPI. How does your in-house solution compare to commercial solutions? For example, FinAPI.
I mean, I'm not aware of the example that you brought up here, but I think given that the in-house solutions, as I said at the beginning of the presentation, we had difficulties to validate the external solutions, right? And I'm actually also hesitant to send out customer data to an external provider. So that always comes with a lot of regulatory requirements attached to that. But the key point is that the scalability. The model has been now developed. You have in that step, in the entire process, you have various steps where you apply different sections of a model. And all of that can now be reused for other areas because the training in this particular section has to be done only once. If you go to an external solution, you always have to, for a new case, to apply a new model and a new contract, and you have to pay for that service. So the scalability was key here in order to develop it. And given that we can compare it for a lot of loans we hand out, remember we have 11 million customers, I am convinced that actually what we see here and what we compare, and when we compare it to others in the market, we don't have to shy away. It's quite, from my perspective, good one, and we can leverage that.
Well, thank you very much. So I'm reading right now that you have answered the question. It was a question from the audience, and the person says that you have answered it. So that was great. Thank you very much, Dominik. It was a great talk, and now we have to move